Good morning and welcome to the Killik & Co market update. It's been another strong week for markets thanks to the ongoing easing of tariff tensions and a good start to the second quarter earnings season. This week we've had new record highs for the FTSE 100, the S&P 500 and the Nasdaq Composite. Here's the S&P 500. It's up 8.3% this year to date when measured in dollars, but the weakness of the dollar is still negatively impacting returns for UK-based investors. This slide summarises some takeaways for earnings season so far. The left chart shows that 23% of S&P 500 constituents have reported their results so far, and the right shows that 83% of them have beaten expectations in terms of earnings. This level of beating expectations is above the 5-year average of 70% and the 10-year average of 64%. One example of a company that has beaten expectations was ServiceNow, which is a company that helps other companies to automate their processes, particularly operational and back-office processes. The company has reported an increase in earnings of 31%, and it raised its profit guidance for the full year. One of the key reasons it gave was that more companies are investing in artificial intelligence and automation. ServiceNow believes it has an addressable market of $275 billion. The shares have more than doubled in the last 5 years, so do give us a call to talk about this company in a bit more detail. In last week's video, we talked about the fall in Japanese exports to the US, and this week it has been announced that the US and Japan have agreed on a trade deal. The US has lowered its tariff on Japanese imports to 15%, and importantly for the Japanese car industry, there is no cap on the number of cars that can be imported at this particular low rate of tariff. This is different to the deal agreed between the US and the UK, which states that only 100,000 vehicles can be imported at this lower tariff rate. The lack of a shipment cap for Japan has fueled hopes that a similar deal could be agreed for the EU, with shares in major car makers surging on the back of this investor optimism. In the grey box on this chart, you can see the positive reactions of BMW, Mercedes-Benz, Volkswagen and Porsche. The US is the largest trading partner of the EU when it comes to cars, with the EU exporting a total of €38.9 billion worth of cars to the US in 2024. This chart makes it very clear why a trade deal for the EU car industry is so important. The latest data was released for UK government borrowing this week, showing the second highest June figure since monthly records began around 30 years ago. And that figure was only behind the June 2020 figure, when there was a massive increase in public borrowing because of the pandemic. A large portion of the increase in government borrowing is being caused by increasing interest payments on the government's existing level of outstanding debt, which currently stands at £2.7 trillion. Government borrowing for June was £20.7 billion, and of that, £16.4 billion was spent on interest. This chart shows the level of interest being paid by the government in each month over the last 2 years. The level of interest being paid has gone up a lot since the base interest rate started rising in 2021. Around 25% of UK government debt is index-linked, meaning it is linked to the rate of inflation. The government must therefore pay more interest on this debt if inflation rises. The pink bars on this chart show what the government is having to pay as a result of this inflation linking. And what's more, the index-linked government debt is linked to RPI, or the retail price index, rather than CPI, or the consumer price index. RPI is typically higher, as you can see by this chart, which compares the two since 2020. RPI is shown by the pink line. Inflation is currently on the rise in the UK, which will pose a problem for Rachel Reeves, and speculation is now building in relation to the upcoming autumn budget. Moving on to have a look at the calendar for next week. It's a big one for big tech, and we are expecting results out from Microsoft, Amazon and Meta. That's it from us. Enjoy the weekend, and we'll see you next Friday.